Hello, everyone, and welcome. So, the topic of today is BIM Upla, the evolution of commodity trading. So, we are going to cover three different points. So, the first one is going to be a kind of not really an historical review, but the three big elements that made the commodity trading how it is today. Then we are going to see, maybe this is the most interesting part of the video for you guys. We are going to see the evolution of a trading flow from what it used to be 15 years ago and what it is right now. So I think it's going to provide you a lot of value. And then I'm going to do a few predictions about what is going to be the future of commodity trading. And of course, we'll see in 2 years if, if I'm right or not. And at the end of the session, I will have a Q&A. So let's start. So first of all, after the Second World War, so we had another kind of globalization, and at that time we had the creation of the spot market. So by spot market, I mean that we have a market that everyday price changes for most of the commodities. Because before the Second World War, we didn't really have like any spot market. So usually prices like, okay, if you want to buy a tank because you want to attack your neighbors, do you need to do? You need to go to see a smelter or whatever to buy tungsten, iron ore, or whatever goes into the tanks. And the smelter, most of the time, are also the owner of the mine. Or if he buys from another mine, if the price is going to be set on a 5 years, 10 years contract or whatever. So it's been that back then we had no really like spot market with prices, the price changing like every day, because most of the commodities were set on long-term contract between the suppliers and the users. So but what happened is like after the Second World War, we had some type of a globalization, like the beginning of the globalization as we know today, and people started to see that there was like arbitrage to do. Oh, if I buy copper there, it's less expensive than if I buy copper here, or I don't know, like in Europe, we used to have like a lot of mines, but people started to notice that it was less expensive to have a mine elsewhere and then to have the product ship here in Europe. So all those kind of arbitrage started to come up. And so this is really when we had the creation of the spot market as we know today. So before before the Second World War, most of the prices was fixed, and it was long-term contract between the suppliers and the users. But after the Second World War, with the globalization, we had really the creation of most of the spot market that we know today. Then another thing that happened was the collapse of the URSS. So with the collapse of the URSS, we had a massive production capacity that arrived on the global market. So and also this is when like most of the first how do you call them, like oligarch, yes. So most of the the old oligarch all came from this fall of the URSS. So basically the guy had, I don't know, a petrol a refinery, a mine or whatever, and then after the fall of the URSS, like everyone was like, look, now who is this owner of this mine, this processing plant or whatever? And the guy that was the manager said, look, now I'm the owner, and if you come to work today, I'm going to pay you a salary. And just like that, boom, both a lot of guys became a billionaire. But during the fall and the, let's say, reconstruction of the URSS, not URSS, but Russia, they had no cash at the time. So that means that all the trading house that was able or that was willing to pre-finance the shipment of Russian product or even product that was from other ex-URSS country could make a lot of money because all those production capacities were like way below market price. So that was the second really big element that made trading as we know today. So the first one was the creation of the spot market. The second one was the fall of the URSS, and the third one is, of course, when China entered in the WTO, the World Trade Organization. I think it was in 2001. That was the first step, and then the second step was in 2003. I think the Chinese president was Hu Jintao, if I'm not mistaken, and he opened really China to world trade. And with this opening, like a massive demand hit the market, and all the prices of all the commodities like shoot up. China was like becoming the factory of the world. So this is the three big elements, so the three waves that made modern commodity trading. So that being said, all the big companies that we have like today, like Vitol, Trafigura, I don't know, Glencore, and so on. I mean, the context that they grew is not the same as the context today. So that means that the ingredients made those companies, I mean, the biggest firm in the world, I mean, in terms of revenue, maybe, are completely different than the context that we have today. So that means that if you use the same ingredient as today, you are not going to reproduce the same company because the historical context was not the same. So if you are interested about this, I will really encourage you to buy and read The World for Sale. So it's a really good book. There's a lot of explanation about those what I've just explained, like in 5 minutes. But I really recommend you to read it, and there's a link in the description below. By the way, in the chat, if you have read this book, just let me know, and just let me know what you think. So Stefan, in times of sanction and economic war, the country receives as lower prices to sell. Yeah, of course. But I mean, it's a question of arbitrage. Is that the prices are lower in Russia right now because they have less market to sell. So if you can capture this arbitrage, you will make money for sure. Yep. So, and what about today? So today, what we are seeing right now is a dislocation of the world order. So we have the West, let's say, like Europe and America, Japan, and the East, which is all the other country, and we are seeing right now a real dislocation of these two blocks. So I don't know where it's going to end, but that means that with this dislocation, there is going to be like a lot of opportunities for clever traders. So don't think, I mean, each like 25 years, there's like a new wave or something. So there's always new opportunities for international trade. Any questions so far? No. So the evolution of trading flows. So now what we are going to see, this is the second topics about today, is I'm going to describe an evolution of a trading flow. So I'm going to take something quite common and quite easy for you to understand, which is the trade flow of rice from Southeast Asia to West Africa. So it's been a trade flow that's been there for, I don't know, like 50 years, something like this. So usually it's origin from Vietnam or Thailand, and then it goes to this part of West Africa. Do you hear it? So 20 years ago, so something like this, it was quite easy to do this trade as a small trader. So basically, you buy FOB, free on board in Thailand or Vietnam, whatever. You put everything on your vessel, and then you sell CIF Dakar, CIF Cotonou, CIF whatever port. And the way to finance that was to use a letter of credit that the bank back then was way more willing to finance you. So that was quite a simple trade, and the margin at the very beginning was like 100 metric ton per $100 per metric ton. So that means that if you do, I don't know, 5,000 metric ton or 20,000 metric ton, I mean, you can make a lot of money with a simple trade. So, but that was back then, and that was quite easy. Over the time, everyone saw this opportunity. A lot of people jump on the trade flow, and the margin for the trader really decreased from $100 to $20 until almost no margin was possible to get with this simple trade. So what happened is like a bunch of commodity trading firms were like, look, when this flow is too competitive, we need to provide more service to our customer if you want to capture more. So basically, what they started to do is they were like, look, my customer, you want to have your own brand on the bags, so all of that as Rise brand. So what we are going to do is we are going to say to you, mate, look, if you want to do your own brand, just buy it from us, and then we are sure that as a trader we'll capture your volume, but also you are sure that you are not going to get fucked with low quality or whatever. So, and for the buyer, you're like, this is my brand. I can market my brand. I can maybe sell at a small premium on the market for whatever reason. So the traders started to produce like personal brand for each of their big customer. So that means that the trader had to start to prepay the good, because if you were like a Vietnamese manufacturer, you're like, look, man, I'm okay with a packet. I mean, giving you like a special packaging for your customer, no problem. But guys, you need to prepare, because I don't want to have if you default for whatever reason, I don't want to have the cost of repacking in normal bag on me. So you need to prepare. Then what also happened is like the traders started to sell with a D Incoterms. So this is DPU, DAP, delivery, DDP. By the way, guys, if you don't know the Incoterms, check my course in the Shipping and Commodity Academy below, because this is the basis. Or check or check on Google what are the Incoterms, because if you don't understand that, I mean you're lost. So DPU is delivery pay on, but it's not custom or something like this. DAP delivery place, and DDP delivery duty paid, if I'm not mistaken. So the traders started to sell D instead of SIF, but that means that as a trader you need to finance more. So they started to finance under CMA and under credit insurance. So for the people that don't know, a CMA is a collateral management agreement. So basically, this is when you, let's say that I'm a trader, I have like or my customer has a warehouse at a port, or I don't know, somewhere in Senegal, and I'm going to say, look, man, I'm going to be still the owner of the stock. So we are going to put in place a collateral management agreement. So that means that even though this is in your warehouse, I'm still going to be the owner of the good. And when you want to take like 20 bags, 100 bags, or whatever, then you pay me at that moment. So basically, as a trader, you start to finance way more of the trade flow in order to capture it again your margin. So that means that 15 years ago, I mean, the financing requirement for a trade, a profitable trade, was maybe 30 days. It was just the time of the shipment. But now you need to prepare at the origin, and you need to finance the distribution at the end. So that means that you need way more cash to finance the whole supply chain. And this example, I took this example in the rice industry because it's a really good example, a good illustration of what is going on in all the other industries. The traders are financing more and more of the supply chain and are getting in control of a longer and longer supply chain, which makes sense, because right now it's way more easier to communicate, to have people flying around and so on. So the trader, there's like more competition. So the trader needs to offer more service to their customer. So yeah. Now let's speak about the third point of today's video, which is my prediction. So basically, if you look at that, you'll see that over the time, the traders start to control more and more and more of the supply chain. And this is not going to end, because I'm pretty sure that in the futures, what we're going to have is like the trader needs to know exactly, because this is also transparency and traceability, something which is going to be enforced in most of the Western country. So the trader is going to know exactly where the rice is coming from which field. Then they need to make sure that in the processing plant there is like, I don't know, no kids that work there. I'm not sure that this is a problem in Vietnam or Thailand, but maybe. So and then the storage and so on. And on the other side, on the buyer side, I'm pretty sure that traders will going to be like in charge of the distribution in most of the country. So that means that over time, the traders is going to be the controller, the client is going to rely on him for his complete supply chain. And we are already seeing this in most commodity, where you can see like now, for instance, with this new lithium mine, where Tesla wants to know exactly from which mine it has been mined, that there's like no slavery, no kids on those mines. So the end users is going to ask for the whole fucking supply chain to be in line with their compliance requirement, which is also traceability, which require traceability. So we can also see this now in cocoa. A lot of end buyers of cocoa is asking where the cocoa is coming from, because in Ivory Coast, in Ghana, you can still have like stuff like child labor and so on. So yeah, over time, the trader is going to be in control and have more responsibility over the supply chain. So this is what I'm predicting. Maybe I'm completely wrong, but this is what I'm seeing coming. Okay. And so, guys, so what do you think? Do you see that also in your market? What do you see? Okay, we'll see that after that. Yes, in wheat, grain, sugar, similarly happening. Traders are trying to control it. Yeah, but actually, this is what the client is asking. It's not like the traders wants to do it, or maybe a little bit. The big one, they want to push the little one out of the market, but the customer, they want the traders to have full control of the supply chain. Because if you are like Coca-Cola, I don't know, a huge company, you don't want to have all those supply chain issues. So as Coca-Cola, you are extremely happy to speak with Cargill or whatever, another big company, and say, look, this is my need, this sugar, I need those, I need this, I can pay you that amount above the market price, and make sure that there is like no shit in my supply chain. And boom, this is how big companies trade between themselves. Yes, but again, it's costly also to control the full supply chain. So, for instance, if I don't know, like if you need to go to the field, and then you have agronomist or whatever sustainability officer that is going to check everything. I mean, this is more costly than if you are a small trader, a team of 3, and you just trade in one part of the supply chain. So there is like also way more cost involved when you want to control the supply chain, and those control costs, I mean, they don't really provide value directly on your P&L. So it's tough it's harder to make it work. And also the big issue with those type of full control of the supply chain is like it's weak. In one way, like, let's say that you are, I don't know, we are in Vietnam, and there's like a big problem, a big weather, I don't know, a tornado, whatever, in the field that completely destroy the Vietnamese production. Then, if you are a really straight supply chain, and you have no way to supply from another origin, you are fucked. Now, let's say that on the packaging of your goods, there's like origin Vietnam, look at those children, blah, 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 that are in our field, everyone is fucking happy. But if there is one issue with the production, then you cannot go to another origin to fill your needs. So it's, in one way, it's weaker in the case of a geopolitical event or a weather event or whatever. But this is where we are going. Okay, guys. So now let's answer all of your questions. Yeah, sure. ESG is now ESG is a big fuckery. I mean, it's mean nothing. You can greenwash a lot, but I'm sure that over the like 20 years, a lot of rules, regulation, and so on are going to come into play. That for sure. And ESG as for transparency, for compliance, and so on. I think the big trading companies have the market. Yeah, sure. Sure. The market has completely changed. Now you need you need way more money just to be accepted by a bank. So no, for sure. But what was your question, Stefan? Again, it's very complicated to get financial approval from my company to transfer that letter of credit to financier. Yes, sure, man. You need to find a bank that is willing to do that. Now you can try the Euro Exim Bank. I think it's a small bank in the St. Lucia. They will issue the letter of credit. They will do everything that you need. But as this is a small bank, maybe the other bank will not agree to work with them. But Euro Exim Bank. I currently export grain for the Midwest US. I have been very successful in exporting to Italy and the EU. I was a for it for 2 years. It helped me win. Yes, sure, man. If you are sure, man, if you understand how the logistic works, yes, of course you have an edge. For sure. But this is cool, man. How I thought that Europe was self-sufficient in terms of grain, so maybe I'm completely wrong. So good to you, Maxwell. How long have you been doing that? So yeah, again, guys, I really recommend you to read The Word for Sale. It's one of the best books about commodity trading. So when it's really entertaining, easy to read. It's a lot of little stories, so recommended you. So guys, let me know if you have any other question. So put it in the chat, and if you want to come and chat with me live, no problem. I will send you a link, and you can just I'll put my headphone, and we can just have a chat. No problem. I mean, yes, it explains what is it, how to use it, and so on. But how to get a letter of credit, dude? You need to speak with your bank. There's no magic around there. And if your bank don't want to do that, then ask them what do you need to do to get one, and then speak with 50 bank, 1,000 bank. I don't know what to do, man. I don't know what to tell you. It's tough. It's tough. Is there certain numbers you use to evaluate what commodities to target if you are small? Example, how you arrive at 10. Basically, what I would look like is where do I have an edge? It's not a question if you are small, which type of commodity whatsoever. It's more like where do you have an edge? Do you know like a buyer very well? What is your edge? So this is how I would selection a commodity. Is not really about like I mean, if there's like a market dislocation and there's a big margin for there is a reason for that. So if you want to fill that gap, go ahead. But I would start with where you have an edge. I know this is it's not okay. Maybe I can give a better answer. So there's a bunch of small markets like dairy is a very good market where there's still a lot of traders that do back-to-back trade, and they can earn money because they provide value, because this is quite a decentralized market. For instance, with milk, you can do whey powder, skim milk powder, full cream milk powder, butter, whey protein, caseinate. I mean, you can do a lot of different products. So that means that there's still a lot of opportunities if you know very well the market to service your customers that don't know the market that well. This is the same with like recycling plastic and so on. So there's a lot of market where you can do the old-fashioned way of trading, just because this is very complicated market or very small market with a lot of small player, and it's tough to know all of them. But then your value as a trader could be, okay, I know that guy can do that there and so on. So there is still a bunch of market like this. I think also lumber in the US is still a bit like this, with a lot of small players. smallish players. Yeah, so I can't. But if you want to do, I don't know, soya bean out of Brazil or sugar out of Brazil, man, it's still like huge. There are huge companies in that trade, so for sure it's going to be way more competitive. So, or I don't even know if it's possible to do to do it as a small trader. He's like another guy, like from my lesson. He said like, look, I mean, what about starting energy crude oil trading? I'm like, do you have 100 million to give me, or what the fuck, man? I mean, do you understand what you're saying? If you want to trade crude oil, man, I mean, your client are refinery, okay, and they are not going to work with you if you are not a huge company that can assure that you are going to to execute the trade-off. So what? I mean, what don't you understand about that? So I don't know if I really answer your question, but it's a tough one. Yeah, I mean, try to find any type of position, but I think the best position to start is as an operator, basically the guy that executes the physical side of the trade. So it's also could be called like a traffic officer, logistic officer, whatever. But usually this is the best. I know, but this is the best position to start because you need to have some understanding of how the physical flow works if you want to do the trade, do the same trade in the future. But if you are a student right now, there is a lot of big companies that have traineeship, like Glencore, Trafigura, Cargill, LDC. I mean, most of them have traineeship where you can like, I think the first year you rotate from different in different departments. So this is the best way actually to start. But it's quite difficult to get those traineeship. Of course, if you have the shipping and commodity academy certificate, it's easier. No, but link in the description below. But yeah, that's true. It's easier because we have a lot of students that got those positions, but it's still very competitive. Do you what? Do you want to come? I can invite. How is it? Yeah. Here we go. I think, guys, if you would just click on the link, I mean, you should be like, you should arrive into the waiting room of the streamer. Yes, soya bean is very tough. Yes. I have a reliable urea supplier from Venezuela. I know the situation, but man, I don't know. Venezuela, it's again, you need to know where they are selling their urea first, so you can see which country accept it. But yeah. I mean, if you are from Venezuela, Iran, Russia, it adds a complexity for sure, man. And to find buyers, man, it's not really difficult to find like those software aggregator data software where you can just put. I mean, it's quite expensive actually those software, but you can just put the HS code, and then you will see all the trading flows of those the product that you are looking for. And so that means that you have the consignee and notified of the people that are buying, and you can just go talk to them. Saffron, yeah, saffron is a good business. Yes. Oh, dude, finish. But Stefan, if you want to find a bank which is which is willing to open a LC for a shipment out of Venezuela, oh, man, yeah, I don't want to say it's impossible because it's not, but it's complicated. It's a complicated situation, man. You probably have to. Okay, see what.
Live. Can you hear me?
Yep. Here we go. Hello. What? Thanks a lot.
Hey, how's it going, Damien? Can you hear me?
Yes, I can hear you well.
I'm also Trevor. We're talking by email, back and forth.
Okay. So, how are you doing?
I'm good. Am I the first person you talked to on live stream?
Yes, I think so. But
Nice.
it's good, man. So, let me know. So what is your question exactly? If you can give me more context, it would be better.
Your last live stream, the one before last time, you were talking about how you arrived at tin.
Yeah.
You said that you were working with a partner on that. You were looking at certain particulars in the market, that there's not a lot of players into it, and I guess the context I want into the question is I guess it matters if you have some domain expertise behind it. Like I guess, did you or your partner have experience in the industrials, metals, before you arrived at that?
Actually, it's. I mean, the thing is, my partner is from Brazil, and in north of Brazil, there's like a tin mine and so on. And so we were looking at this trade, and I was like, maybe we can do that, but we need to know what are the margin, what the competitors are doing, and so on. So basically, we ask. I mean, it took us like a few months to get to some tangible information, but we did our due diligence on the trade, on what was going on. Then I also spoke with a bunch of traders that trade on tin, but on different origin, to see where the buyer, what is going. I mean, it took us maybe 3 to 4 months to decide. Okay, we are going to do it, and most of this due diligence is done by email, by call, by pinging people on LinkedIn and so on. So this is not like real information that we found online.
No, I mean, absolutely. I mean, so there's your competitive advantage right there, part of it, you know?
Yeah, and what we saw, so it's like there was a good margin. There was a good margin, but the margin is for a reason. I mean, this is a very, very complicated market to to tackle. There's a lot of very small miners. It's quite expensive tin concentrate. So that means that you need to put quite a lot of money there, and you deal with unreliable sellers, and then you need to gather all the elements into one container at least, and then ship it to Malaysia or whatever. So you need to finance a bunch of the transport also. So it's quite challenging, and this is the reason of the margin. It's because it's challenging.
Sounds like you have a good plan, though. You know, just I think on the live stream, me and some of the other people were a little, hoping that you have everything together in that. But it sounds like you know what you're doing. You know.
No, I don't. I mean, okay. So it's easy to speak about it. Because trade is simple. This is simple.
Absolutely.
You are going to buy shit someplace, and then you are going to ship it to another place, and hopefully it will go well. But so on paper it's easy, but then to execute, this is a difficulty, and this is why another guy asked me like, "Look, Damien, why do you speak about that like on a live stream or on live?" I'm like, okay, first, I think maybe like 200 people will see that, so I mean, it's not like. But second, it's very, very difficult to execute on that. So I can give you all the ideas, but the people that could really do it, I mean, it's tough. So this is why I'm not really afraid about the competition, or people like will steal my idea, whatever. If you want to do it, then go into the north of Brazil. You'll see. You'll speak with the people there. You'll see how it is, and then try to ship a container.
Yeah. I kind of find it funny where they're coming from. They think that some lunatic off YouTube is going to go show up in the Congo and try to execute that in the exact same way. I mean,
you'll get scammed, no problem. But you can try. I mean, this is a free world. But it's like, and especially Congo, it's even like harder to there. And in Congo, you need to have like there's also a bunch of. You need to be a part of an association that guarantee that you are not sourcing from people from mines with children working there. So it's tough. It's tough. And what about you, man? So what do you do? Are you the guy that do the caustic acid on no? Maybe
not doing caustic acid, but sounds interesting though.
So what was your email about? Because I remembered your name, but I don't. What do you do? What are you trying to do?
Agriculture, non-perishables in Africa.
Okay, from where to where?
From where to where? Right now, mostly North America.
Pardon?
with USA and mostly from West Africa.
Yeah.
We're looking at non-perishable dry goods mostly. Some light processing on some of them, but stuff that we have confidence in our supply chain. There's just supply chains in this part of the world are just not very sophisticated, as you might know. It's just lack of
Yeah.
logistics to some of
Why,
these remote areas.
where are you buying from? Which country in West Africa?
Guinea.
Guinea, Conakry.
Yeah. Conakry is the main capital.
Yeah, but there's like I think there's like 3 Guinea: Guinea-Bissau, Guinea-Conakry, and Guinea something.
Oh yeah,
So
Guinea-Bissau. No, this is Guinea. The real.
Yeah, the one
Guinea.
just below Senegal. So
Yeah.
yeah, I know it very well. So yeah, it's of course it's challenging there. No. Yes. And so you are buying from Guinea. You ship to the US. That's the idea.
Yeah.
Have you already done that successfully?
Yes.
Cool, man.
We were looking to get it on a larger level with that. We've had some success in talking to wholesalers in the US that'd be buying from us as well. So we're in a good place. We kind of worked backwards, like having our buyers before we have our sellers. You know what I mean? And so
but it's easier. It's easier to have the buyer. It's no. It's more difficult to have the buyer. So this is the right end. You need to speak with the buyer first, and then you try to supply what they want. This is the best way to go.
Absolutely. Hey, I want to get your opinion on something. I have another friend of mine. He's looking to stockpile a ton of sunflower oil and wheat out of Ukraine right now. Apparently, the Ukraine government wants to do some export ban. I'd like to get your opinion on that. He's looking to stock some warehouses in Delaware or something with this, and he wants to get like containers of the stuff
from Ukraine.
Yeah, from the Ukraine. Apparently, the government there wants to do some export ban. I don't know all the details behind it, but yeah, he's want to go ahead with that, and I'm cautioning him about sitting on it for that long.
Yeah, it sounds like an extremely bad idea, but
yeah.
But then it's people that got to do their own mistakes. But it's yeah. I don't really see why you would do that. Maybe, but and it makes no sense. Why would Ukraine ban export? They need the money. So they are struggling to. From what I've heard, they are struggling to get their export back online because they need the US dollar to. But I guess to fund the war. But so this is weird. It makes no sense, man. But I don't know. So,
yeah, I don't want to make this political or anything, or but I don't know. I think part of the reason why is they have some kind of dystopian outlook on things. Their supply chains. They probably think that they need it internally for the people. I don't know. It's the only reason I could think.
Yes, but I don't think. Yes, but maybe you're right. Maybe the guy's right, but buy something out of the US and then stockpile something out, and then wait for the price to go up. I don't know why you would, but that's weird, man. I wouldn't do that. I think like extremely complicated. It's better buying like I don't know Bitcoin if you want to make money. That's weird.
Yeah, I'm just going to have to comment, Stephen. So actually, the sunflower oil from Ukraine is cheaper now. Yeah, that's why he's interested, Stephen. But sunflower, amongst other things.
Yeah. I don't know sunflowers for. What there's like maybe something specific about it that I don't know. That would make a very good idea, but seriously, it seems like the guys need to lose a lot of money. It's just stockpiling is a very bad idea most of the time.
Yeah,
but few times when it works, you made a lot of money. This is great, but most of the time it's a very bad idea. What you want to do with commodity, you want to have them moving. That's it. You want to have them moving, so you can and you make margin, and then you want to have volume, and you don't want to stockpile anything. Or if you stockpile anything, you are edged for whatever reason, and your cost of carry of your product, the physical product, is lesser than your edge, so you can make. But still, I think it's. And why would if he has money, maybe he should do something else with his money, man.
But yeah, I know. He's telling me he's telling me that he has buyers for like a couple containers right now. He's like, the rest of it he's convinced till he can sell it off for the year end. That's I don't know. I think it's
but okay. He already has a trade flow.
Kind of. Sort of, yeah. I mean, he could probably sell 2 containers of it and just store the rest of it. But yeah, it's still a lot of money up front, though.
But and sunflower is not that expensive. But yeah, I mean, it depends for. Yeah, of course, if he finance everything from his pocket, it's a lot of money. But maybe he's completely off with that, and for whatever reason, sunflowers in other parts of the world is going to flourish very well. There's going to be like a huge a huge production, and I don't know, man. It's tough betting on a product like this. If you want to speculate, then go on the future market. I mean that would be my advice. But maybe this is a play, and he's going to make a lot of money out of it.
Yeah, maybe. I mean, I don't know what most of your audience, where they're at here right now. If they're new traders, if they're trying to learn something from this, if they've got deep pockets in it. But I guess this question: do you think it's ever worth it to speculate long term and have the holding costs for commodities, have storage for maybe months to maybe a year horizon?
It's tough. I mean, you really get to understand what you are doing, and most of the people that do that, they don't. So my point is, there's like 2 ways to see it. You can always speculate. So basically, you are always speculating, and if a year you are completely wrong and you lose money, you are going to make money on the other year, or at least on the average. Let's say that you will make money. But if you want just to speculate on spot because you think whatever, you are going to get blasted. I mean, you are going to lose your money for sure. So that's basically what I can see. And I've seen like traders, I mean, really experienced trader that just blew up because they speculate, and for whatever reason, it didn't go in the right direction. So that's I wouldn't. I mean, but I know that in some market, extremely competitive market, you have to speculate to sell. So this is another ball game. But it's just like you have the cost of carry, man. This is what I don't like it. It's the cost of carry. So you are losing a little bit of money every day.
Yeah.
So that's the part that I don't like with speculating with having product in the warehouse and so on.
Yeah, no, I agree.
Usually, what I did when I used to speculate, so we had like a strong view on the market, and but we speculate in short time frame. Like, let's say that we see that all the suppliers of this product is saying, look, we are sold off. We are already committed for 2 months, 3 months, 6 months, blah 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 blah. And we're like, okay, so there is something that is happening on the physical side. It will make sense to buy as much as we can right now, but then we are going to sell it in the next 2 to 3 months. You see, we are not going to hold it like very long. So that's the type of like speculation that we said that I used to do, but it was for a few months top.
Yeah,
and sometimes sometimes it worked well, and sometimes most of the time it worked well. But also because we kind of a good sense of what was the market, where the market was going, what is happening, and also the fact that if you call a bunch of suppliers and they all told you the same story, you're like, okay, so obviously no one can put their hand on the product right now, so people will have to pay up to get their goods. So that's maybe a good moment to speculate. So even that, it's really because we are on the market every day that we can make those kind of calls.
I agreed. And I agree with Stephen as well. His example, in Brazil, he has the bars, a couple months there, you're making $130 per unit on that, or ton. Well, that's good. I mean, a year or 2 back, there was a sort of black swan event in oil right now, which the world just can't get enough of right now, right? And I think in the futures market, oil was like really depressed. It went negative. Actually, I don't know if anyone remember that. I think it was in 2020, 2021. I know somebody who made a lot of money off that. They somehow found storage capacity to make the numbers worthwhile, and I think they made like $250 million, I think, in like a month or two after.
Yeah. But again, my point would be like to your friends, maybe have him to have like, if he start like a import-export business, like import sunflower oil out of Ukraine, sell in the US, and he has like regular flow, then he's like, okay, now I can say, okay, I have like, I don't know, 2 containers a month. Let's say with so 24 containers a year. So let's say that with 2 containers, I will try to speculate. I will have a little bit of stock. This is how I would do it. Not like starting to, I'm going to do something completely new. I have no idea what I'm doing, and I would speculate. dude, it sounds like a very bad idea. But then it's that's yeah.
Exactly. So that's the takeaway. Know your market. Do your homework. I love it. Damien, I'm gonna what?
No, not about that. It's just that it seems like I mean, when you want to speculate, you need to know what you've got to do, what you want to do, and there's other people in the market that know it way better than you. So this is why it's tough, you know. It's a real competition. But man, thanks a lot for coming up to be the first caller, and then maybe see you in the next live. Man.
Yeah, I was just gonna say it's gonna jump off, but solid content, Damien. I'll try to be on your next live stream. Love it. Hopefully someone else comes on. Thanks, man.
Ciao, ciao.
Ciao.
So Stefan, about the fluent. Huh? Yeah, Stefan, you're from Venezuela. Yeah, sure, Venezuela and stuff. Yeah, about Sunflower Oil, man. For the one that are student of the Shipping Community Academy, in the private, we had a call 2 weeks ago with Nick from the president of Namai Enterprise, and he when there. I mean, yeah, he wouldn't mind if I'm sure there's no problem. I can speak about it. So it was last summer in France. There were like no sunflower oil available because of the start of the war between Russia and Ukraine. And I think that he did a very, very good. I mean, it sourced sunflower oil and then sold it to restaurant in the south of France, and I think he made a killing. Everybody wants everybody promises, but yeah, sure. So you take the risk, Stefan. Yeah, Damien's right. Yeah, don't take that risk. Yeah, thank you, Stefan. No, but I'm saying, like, if this is your business and you are like buying, selling, you know what you are. I mean, you know your customer. You know that if you are stuck with the product, you know how to sell it and so on. Then yeah, by all means, you can try to speculate a little bit, have a little bit of stock, and also as an importer, if you want to distribute the product, it's good to have stock, just because you have product if your clients want it. So it's not that bad, but yeah, just stocking to stock. It's having a stockpile just to have a stockpile. It's something that I wouldn't do, especially if the reason is that you think that Ukraine will do something, Russia will do something. I mean, who knows? Who knows, man? Thank you, sir. Okay, guys. So I will jump again. Thanks all of you. And I will see you in 2 weeks, because next week I'll be in Dubai. So no show. But the week after that, I'll be back with some other content. So wish you all of you guys a nice day. Ciao, ciao.